Eric, the cash flow doctor, and I'm here to share the new Small Business Administration Economic Disaster Impact Loan, or the Economic Injury Disaster Loan. And this is a really hot topic that's happening right now. As we all know, we have this huge pandemic happening right now called coronavirus, or COVID-19. And what that's triggered was, it was like a black swan event that caused a large ripple disruption in the economy. And for many entrepreneurs, we're feeling it. We're having impacted revenue. We're having the need to force and shut down our operations if you got a retail practice, or if you have some sort of an operation that's dictated by a brick and mortar type of operation. Especially now here in California, for me, the governor recently mandated a stay-at-home order, a shelter-at-home order for all citizens of California. We're starting to see this happen across country. Jersey has it and stuff like that. So as part of this economic relief that was proposed and released, there is a program that's being provided by the SBA, the Small Business Administration. And this is a loan that not a lot of people really understand. Many folks out there know of the SBA from other types of financing where you have to provide business plans and go through this whole process, and that's called the 7A program. And not a lot of folks are aware of the Economic Injury Disaster Loan Program, which is actually really, really good, really cool. They open up, I believe it's like $80 billion for small business owners to be able to participate in this loan, where it's provided at a low interest rate. It's provided with preferable terms on repayment, and some of these loans can even be treated and considered down the road as grants, and I can't guarantee that, but that is what's in proposal right now. The thing is, because there's only $80 billion that is open for accessible funding for this program, this is going to go pretty quickly. We have a window of opportunity. If you're an entrepreneur, if you're a business owner, and you're facing economic injury from the coronavirus, from having to shut down, we're in a very limited window of time to be able to apply for this and possibly have funding. We're probably looking at max 3 to 4 months before all this funding gets shut down or gets used up. On top of that too, the SBA, the Small Business Administration, is probably one of the most understaffed and underfunded federal branches of the government right now, which is unfortunate, but they have an extremely high caseload. So with that said, there's a lot of entrepreneurs out there that are struggling, that are having challenges with cash flow, with financing, because they are forced to either close their operations, scale down. But now you're thinking, man, what am I going to do with my employees? I have all these amazing employees. I don't want to lose them. What am I going to do about my bills, my overhead, my rent, and everything like that? So I want to share just some of the main bullet points of what this loan is, what it isn't, what you need to apply, and what the next steps look like, just to kind of clear the air. Now, give you a background, you guys all probably know me. I'm the cash flow doctor. I help businesses with their tax strategy and accounting solutions, and I also step in as a CFO for a number of companies. And the way that this is tied in with my business is there's a lot of accounting that normally needs to be done in order to apply for one of these SBA loans. So that's where I would be more than happy to assist you on it. But I want to just share information on how this works, how it operates, for you to possibly use for your business or for you to share with your clients. Because I know there's a lot of folks out there that have consulting clients, advertising clients that are struggling right now. And this is an amazing resource. And again, it's a limited time window of opportunity, not to put this whole like rush type of thing to it, but there's $80 billion that was unlocked for this, and there's a tremendous amount of volume happening right now in this space. So it's called the EIDL loan, or EIDL, the Economic Injury Disaster Loan, and it's administered by the SBA, which is a federal department from the U.S. government, the Small Business Administration. They've been around for a long time and are here to support small businesses. The thing is, many of us don't really interface with them because many of us don't normally need lending for our businesses. Many of us are bootstrapped, or we raise our own money from our own credit cards or own bank loans and stuff like that. But this has been a resource that's been out there, and it's amazing that they have this open. So with the Economic Injury Disaster Loan, the way it works is they're providing up to $2 million per business owner for operations. I want to be clear, this is for your operations, your your fixed costs, your debts, your payroll, and everything. This is not a loan to help you expand. This is not a loan for you to take as a distribution of profit from your company. Those are no-nos. This is purely to help you keep your business operational and allow it to keep running in light of the challenging situations that we have right now. So this is for operations. The interest rate is very low. It's 3.75% for business and 2.75% for nonprofits. That's right. The SBA is also providing these loans for nonprofits. If you have a nonprofit organization, this is probably one of the most challenging times because you've had to shut down all of your fundraising activities. All of your donors are busy clamping down on their finances, and many small businesses that are operating as nonprofits probably have less than a month worth of runway before they have to shut down. So tapping into this is actually very impactful. Businesses are defined by if you are a sole proprietor. Hold on, I got sticky notes all over my floor. There's so many notes I've been taking on this and researching this over the last couple of days. It's been nuts. But the small businesses is classified basically based on your entity. It's either sole proprietor, LLC, S Corp, or C Corp. It's typically employers that are less than 1,500, anywhere between 100 to 1,500 employees, and obviously less than that. You know, this works well for companies that have 2-3 employees. If you have I see my amazing friend is on, Natasha, has got a wonderful organic smoothie salad restaurant place down in the Encinitas area. She has a couple of employees in there. This works dramatically well for that. This is for income loss because of COVID-19. So these loans are not going to get approved because you've had an economic downturn before then. These are things, this loan is for if you had an economic impact because of the coronavirus. Here's some good examples. If you have a retail location and you are a restaurant and you had to close down because of coronavirus, perfect. If you're a real estate investor in terms of you're a property manager and you can't collect as much revenue because tenants aren't able to pay, good choice. If you are a real estate professional in terms of being a realtor and you have a team that works for you, and because of the impact on the real estate market and also the impact on you being able to show homes, you're not able to bring in the revenue you normally are able to. Perfect. Now, industries that this does not work for, that are not approved. Obviously, if you're in the hemp marijuana business, that will not work because it's not federally approved yet, unfortunately. Other things are if you're in a gambling business, does not get approved. If you are looking to take the loan proceeds, and put them towards another investment property, will not work. These, again, are for operations. They're not for scaling. They're not for growing. They're for keeping your business afloat. That's the whole purpose of this, right? And especially in times that we're facing right now, many of us are more concerned about keeping our businesses afloat and keeping our businesses operational and putting food on the table of our employees than anything. This is going to be used for payroll, fixed debts, costs, your accounts payables, etc. Can you use it to pay yourself? Only for services you provide to your company, not for dividends. So if you are on your own payroll as an S Corp owner, which you should be on payroll, I sure hope you all are putting yourselves on payroll, you can use this to indirectly pay you, but it has to be for remuneration of services you provide to the company, not as a profit share distribution. Right now, all 50 states are approved. About a week ago, only 43 states are approved. Now they finally open up across the country. All 50 states approve to be utilizing this. And some states even have their own unique programs as well. I can't go through it in depth on this Facebook Live because it'll take forever. 50 states, there's a ton of it. But New York's got its own program. California's got its own program on top of the SBA. And this also, like I said, fits for most business industries. As long as you're not running something that's an illegal, federally legal business, like the marijuana or dispensary business, or you're not in the gambling business, you should be fine. So a lot of folks are like, okay, Eric, I get it. They're going to give us up to $2 million to help us run our operations. How does it actually work? How do I apply for it? And what does the next steps look like, right? So let's take a look at that. Spend some time writing it all down for y'all because I love all y'all. And I'm here to support all your businesses. So let's talk about what you need to apply for this SBA loan. First of all, you apply online. This is not your typical SBA process. where the SBA process is you go to a lender and then you apply with the SBA loan to the lender in your traditional 7A where you put a business plan and all that stuff. This is completely different. This loan is applied for on the SBA website. And because of the fact that there's so many entrepreneurs, so many business owners applying for it right now, the volume is causing the website to crash. So there, you have to use very specific timing on when you apply. And that's why my team and I, we've specifically designed workflows on how to be able to accomplish that. But this is what you need. You need credit of 650 plus as an individual. This doesn't ride on your business credit. This rides on your individual credit. So keep that in mind. I had one person that responded to one of my Facebook posts and said, I wasn't able to apply because I didn't have enough business credit. She was probably referring to the 7A program, which is the traditional SBA loan program. The disaster relief falls on your personal credit. So you want to make sure your personal credit is good, obviously. 650 plus, that's a pretty reasonable score in terms of credit. You need to be current with all of your tax returns. That means at the very least, because your 2019s have been extended because of the coronavirus, the national declared emergency, disaster, and what have you, been extended until July 15th of this year, you need to have at least your 2018s completed. You also need to have your 2018s paid for or in an installment agreement with the IRS. You got to be current with the federal government in order to qualify for a federal loan. Surprise, surprise. Right, so you want to make sure all of your tax returns are current. You don't want to be in arrears. You don't want to be in collections. You want to be in current status with the federal government in order to apply for an SBA loan. And that's where my team can come and help you out with that situation over there. You also need to have a P&L from your last year and also a P&L for the current year. What's a P&L, you're probably asking? A P&L is a profit and loss. That shows how much revenue you took in, all of your expenses came out, and then your net profit. They're looking for the previous year, which would be 2019's, and you're also looking for the current year to date, which means from January 1st of 2020, and today is March 23rd. So to March 23rd of this year, or whenever you apply. They want to see that your business is operational, it was growing, it was profitable up until this economic challenge hit, right? They want to be able to fund and be able to set up loans based on your ability to repay. So if you have a business that hasn't been profitable for the last couple of years, it may be very challenging to qualify for this loan unless you could justify it. But for the most part, a lot of folks that have been running a profitable business have been impacted by this whole coronavirus thing. And by showing your P&Ls from the previous year and from year to date, it's going to allow you to qualify for these loans. You need to sign 4506T, and that's IRS jargon. I know I'm probably saying too much IRS stuff because I'm an IRS guy. But what that is this allows the SBA to pull your IRS tax transcripts on your behalf. And this is why you need to be current with all your tax returns. And I know in the mortgage world, there's a lot of folks that put tax returns together and sign the name on it and submit it to the mortgage companies. The mortgage companies don't really look at it. The SBA is very different. They're going to actually pull the IRS transcripts to make that sure that you're current. So if there's a mismatch on you saying, I'm current on my tax returns, but it doesn't show up on the transcript, that's probably going to be a good reason why they decline your application. If you're going to be borrowing over $25,000, you're going to need attached collateral to it. Collateral can be anything like any type of assets like a car, accounts receivables, a home, real estate. It's collateralized with something that you own, right? Now, the SBA will not decline a loan if you don't have enough collateral, but they're going to ask for you to provide as much collateral as possible to back up the loan that they're providing. Now, let me be totally clear. This is not free money. This is not grant money. This is not magical helicopter money coming out of the sky. You're borrowing money from the federal government. However, it is at very low interest rates. It is at very preferable terms. And again, this is to help you keep your business alive. This is not for you to borrow from the SBA and go to the casino and put it all on black. This is not for you to go and speculate and buy speculative investment properties. This is not the fit for this product. You need to have a complete application filled out. You have two different applications. One, if you're an individual sole proprietor, which is the SBA 5, I believe it is, and the one if you are a corporation or an entity like an LLC partnership or anything like that, then that's called the 5C form. You also need to fill a personal financial statement, which breaks down all of your assets, life insurance holdings, retirement holdings. Let's be totally clear again, they want to understand your entire financial situation to best qualify you for one of these programs. Now, with the amount of data that they collect and the amount of data that my team needs to collect to help to allow to apply for this, the amount of data that we need to collect can almost feel like a rectal exam. But it's the same type of information that we pull for clients when we're doing tax negotiations with the IRS. Everything that basically breaks down all the assets you got, vehicles, stocks, investments, cryptocurrency, collectibles, jewelry, credit card notes, other fixed notes, everything like that, because they want to understand your entire financial situation. And they want to know, have you tried to borrow or utilize funds from elsewhere to support your business venture? And is the SBA the last resort? Then yes, that turns you into a good qualifier. So there's a lot of information needed for this. For my team, it normally takes us 2 to 3 hours of collecting information from a taxpayer or from a client to be able to just even start the application process. It's a very lengthy process. You also want a schedule of all fixed liabilities. Fixed liabilities meaning like if you have an existing accounts payable, if you have any notes outstanding, if you borrowed from anybody, if you got investors that you've created loans against, stuff like that. They want to know your schedule of liabilities, and they also want to know your balance sheet. Now, I'm spitting a lot of big words here. A lot of these big words are very accounting related. Things like your balance sheet, your P&L, right? These things are all accounting related. Your balance sheet, your personal financial statement. So these are things that you need to have in place for you to apply. So if you're not presently doing bookkeeping for your business or you don't have current books, you're going to have to catch up with all this stuff in order to apply, just to be considered to apply for all of your tax returns, right? So these things all need to be put in place for you to be able to apply for these loans. Now, a lot of folks are saying, Eric, what does the process look like when I apply for an SBA loan? Great question. And I'll go through some other questions through here as well after this. Great question. The application process is pretty straightforward. You're basically going to collect all of your data, collect all of your tax forms, collect all of your information. And if you need help with that, my team could assist. Once you put that all together, then you apply online, or my team will take care of the application for you. You submit the application. The application gets assigned to a caseworker at the SBA or a loan officer at the SBA. The SBA would look at it, and then from there, the SBA would either ask you for more documentation, which is entirely possible. Sometimes the SBA may look for additional documentation in terms of income, in terms of assets and stuff like that to validate information. And then from there, if approved, then the SBA would give you a call to set up and create the loan proceeds and send you the first $25,000, and then the payment schedule that comes to you is determined based on your capital needs. So if you get like a loan for, let's say, 100 grand, they're not just going to cut you a check for $100,000. They're going to be like, okay, what amount do you need to get your feet off the ground and to allow you to operate your business, and how do we create the distributions beyond that? So $100,000 loan from the SBA could be broken up as 25,000 chunk in the first payment, 25,000 2 weeks later, or maybe 25,000 a month later, a month after that, and a month after that. So 4 months of 25,000. And so what the SBA is going to do is they're going to look at your expenses, they're going to look at your liabilities, they're going to look at your fixed costs like rent, payroll, and they're going to be like, okay, how much can we provide to this applicant to allow them to cover their expenses? Because again, this is an operational capital loan that the SBA is providing for you. It's not something where you're going to just scoop up all this money and be like, oh, it's time to go to Mexico, guys. No, it's not that. It's not for play money. So that's how it works. Typically a timeline right now, from my understanding, we put a couple of applications in for a couple of clients, but the timeline is still kind of vague. But figure it's going to take anywhere from 5 to 8 weeks between beginning to end. And as we get deeper into this process, it's going to take longer because of the number of caseworkers is limited at the SBA. So not to light a fire under your ass, but like the sooner you could start this process of putting your books together, putting your numbers together, getting all your taxes done, and filing and applying the sooner you get into that process, the shorter your timeline should be. Is that going to change in the future? I don't know. Is there any guarantees you're going to get a loan if you go through this whole process? I have no idea. I can't guarantee any of that. All I can guarantee is if you do it the right way and you have all your paperwork, you're going to put the best presentation forward to the SBA. Your chances of getting a loan are much higher than somebody that doesn't have all their paperwork. Okay, so that is the SBA loan in a nutshell. It's a wonderful program that the federal government's opened up because of this whole coronavirus COVID-19 crisis, and that the shift in the economy since that shutdown has occurred for a lot of states. And many states, the shutdown started a week and a half, 2 weeks ago. You know, if you are operating a business that's been impacted by this and that needs capital to keep your business running, keep your business afloat, this is an amazing, amazing program that you should take part in. So let's go through some questions. I saw some questions pop in up here. I see a bunch of folks. Okay, let's holler out at all the homies that we got here. Linda Rank, AJ, Natasha, Nicholas, all my homies here. Chance, Steve, August, Paul Murray, Denise Arana. Okay. Terry Summers, Big T-Dog, Deandra Page, Tim Lowe, Joe Young, Danny Powell, he's an awesome comedian. Janelle, Lee DeBoo, Colin, Sam Prentice, awesome. Tiago's got a question. We'll go over that. Courtney Russell, my coach in the breathwork space. Good to see you. Mindy Dow, Andrew Suba, Malad, my good dear friend Malad, Rolana, Tabby, Kendall, Kyle, Steve, Charlie, Caleb, what's going on, brother? Missy, my spiritual soul sister, and Michael Marcial. Okay, so let's go through some questions. Ilan Becker, what's up, brother? Okay, so we got some questions here. The first one is from Linda. Why would I want to take out more debt with the debt that's incurring? That's a really good question. Probably the best way of looking at it is if you get debt from the SBA, you're paying an interest rate of 3.75. Now, if your debt for equipment leasing or if your debt outstanding is at 10%, let's say your debt's at 10% debt, and then you could borrow from the SBA at 3.75. This will do two things. It will, number one, potentially reduce your monthly payment because the SBA will give you up to 30 years to pay it. I don't know if you guys can read my sloppy handwriting, but there it is. It's just 30 years. Whereas many business loans, many business lending financing facilities are anywhere from 5 to 10 years. You're going to have a much higher payment, higher interest rate. So if you get a lower interest rate at a longer term period, it's going to help you reduce your monthly payment to improve your cash flow situation. And plus you got an arbitrage spread right there. What's arbitrage? Arbitrage is the difference between what you're paying and what you should be paying somebody else. So if you're paying 10 on your debt and you're getting a note at 3.75 from the SBA, you're saving yourself 6.25%. Which doesn't sound like a lot, but it is a lot. On $100,000, let's just say it's just straight interest for the year, 100 grand. That's going to save you $6,250 for the year and possibly also reduce your overall monthly cash flow outlay to pay for that. So that is a good reason of why you'd want to take on more debt with the debt that's incurring. It will allow you to either pay these debts or pay these notes to allow you to improve your cash flow situation for your business to keep it operational. So think of it from a cash flow perspective of how it can improve your payment situation. So that's a good question. On top of that too, the reality is many of us have invested tens, if not hundreds of thousands of dollars in our business. This is not necessarily a gamble, but this is a necessary cost of doing business for us to stay solvent, or for many businesses to stay solvent in a challenging economic time. If you could borrow money from the federal government at a low interest rate and keep it in a nest egg and pay off your expenses and allow you to still keep your business in operation 6 months later, you still have an operational business. Whereas if you get too fixated on, oh no, this is more debt, oh no, this is more money that I owe, and you try to bootstrap everything, you may come across a situation where you have a cash flow crunch and you might have to end up shutting down a business. And what is arguably a bigger risk? Taking on some debt from the federal government that obviously is interest or tax deductible from the interest because it's a business expense, but a lower interest rate and taking on some debt and just paying them back when you could pay them back, or taking the risk of having to bootstrap something and then have a business collapse because you don't have enough access to capital to keep it running. So it's definitely a personal decision. It's definitely a personal thing. I'm not leading any of you into any one way, or I'm not recommending take on more debt if you don't want to take on more debt. All I'm saying is this is an amazing option to allow you to open up capital, to allow you to open up operational expense coverage from the SBA to allow you to keep running your business until the economy starts stabilizing again. Hopefully that helped you out, Linda. Let's see what else we got here. Tiago says, may I pay independent contractors with this money? Now, again, this is for operational expense. As long as the independent contractors are associated with revenue driving activities for your business and you're contracted to pay these independent contractors, it is treated like payroll. So yes, you can pay independent contractors with the money. Let's see what else we got here. Chances rectal exam. Yeah, like when I help clients with their tax resolution, if a client owes like, let's say 200 grand to the IRS, and I go through what they call the offer and compromise process, the financial forms I got to fill out is basically like a rectal exam. I need to get all of your information in terms of all of your savings, what you got in crypto, your cold wallets. Yes, all of you cryptocurrency folks out there, all of your assets. I need to understand your debts. I need to understand your monthly expenses. It gets very in depth and it's very time intensive to do. But yeah, it does feel like a rectal exam sometimes. Missy says, thank you. Hey, I deeply appreciate you, Missy. So thank you for hopping on this. Caleb Fowler, my man. I appreciate you, man. Milad, my good friend, is an SBA loan a viable option for an e-commerce business? That's a really good question. Now, the SBA loan, there's two different kinds of loans. They have the 7A, which is traditional financing, which could be used for anything. Expansion, growth, inventory, payroll, whatever you want to do. That's a 7A loan. And that's a traditional SBA loan where you have to submit a business plan and all that stuff. This is completely different from that. This loan is a relief program that was just recently released, and it's designed for operational costs. So if you have an e-commerce business and you're paying overhead for warehousing, if you're paying for overhead for like financing, if you're paying, let's say if you got investors you're paying back on a monthly basis, for example, if you have salary that you're paying to employees, then this loan will be very helpful in helping you keep your business operational. Now, it's not to be used for purchasing inventory. This SBA EIDL loan is not to be used for expanding or driving for ads or anything like that. It's designed for your operations in terms of keeping it afloat itself. So I don't know if that really answered the question. And I know your business very well because we work, my team works very well with you and your partner. But it really comes down to what your intention with the funds are. To keep your business afloat, keep it operational, yes. To expand, probably not. Okay, Linda, hopefully I answered your question. Yes, perfect. Okay, Vicky, encouraging all self-employed borrowers to apply. I highly recommend it. Again, this is a limited time window with the SBA. They got $80 billion of funding, and right now their website is overwhelmed, and there's a lot of people applying. The thing is, though, there's a lot of people applying unprepared. So they're going to get to the caseworker, and half of the stuff is missing. Well, on the other side of this, half the stuff is missing, and they're not going to be able to get approved for the loan. So this is a really good time to make sure you're as prepared as possible. You got all of your books straight. You got your tax returns all done. Submit the application, financial statements, balance sheets. If you need me and my team to help you put this application together, I'm more than happy to help you with that process. Put them at, if you submit your loan application complete with all the data you need, you have the best chance, you have your best foot moving forward on getting a SBA loan. Now, is it guaranteed? Am I guaranteeing you're going to be getting a loan? Am I guaranteeing you can get 100 grand from the SBA? I can't guarantee anything. I can only guarantee that we'll put your package together as best that we can based on the information you provide and the accounting work that me and my team take care of for you. Now, how much can you get from the SBA? It could be up to $2 million, but it all depends on the way that the SBA loan is applied for, how much you're requesting. And if you don't know how much to request for, that's fine. The SBA loan officer will take a look at your situation and determine a number with you. Okay, let's see here. Milad, yes, 10 versus 30 years is huge in terms of monthly payment, plus the interest rate seems like an incredible opportunity. Absolutely. Oh, we got some new friends on here. We got T-Dog, Terry Thayer, Marta Hatter. Hey, Mama Hatter. Mitt, Vicky Van Arsdale, Tony, my homie from Philly. What's up? Jonathan Warner, Chris Kwok. What's up, man? Tyler Ellison. My dear friend Jessica Fraser. Oh, hey, what's up, Jessica? Gary, Malat, Sana, what's up? I was just on a quick chat with Sana. So this is the SBA EIDL loan. There's a lot more that's coming out. I'm building a free report. I'm not fond of like using the whole free report or opt-in or whatever, but my assistant and I are putting together an info sheet on what you need, all the details of this. If you're interested in grabbing one of those info sheets, just put a DM or slide me a DM or put your put me or I want it in the comment section below, so that way we'll DM you the report when we're complete at the end of the day today. It's going to break down the SBA economic injury disaster loan, the EIDL loan. And again, just to recap, because I got some amazing friends that just popped in. Oh, likelihood of getting loan if you have a credit line from the bank. It doesn't matter how much lending you have outstanding. What the SBA wants to know, Fraser, that's a really good question, is have you tapped into other capital resources to cover your expenses prior to applying for the SBA? They want to know, hey, are we the area of last resort, or have you not tried everything else? Like if they do the loan application and they find that you have 200 grand in a bank account and you haven't utilized it, they're probably going to decline asking for that loan unless you have very unusual circumstances, right? So that's a really good question. Okay, B wants to know, B knows where to find me. Okay, we got you, Linda. We got you. Tyler wants a report. Annabelle wants a report. Yeah, we got a report for you. Chance, I got you, brother. Eggplant, nice. Josh Felber, what's going on, brother? See you on this call. So again, I just want to recap Reader's Digest version, what this SBA loan is and what it's not. Again, it's up to $2 million of capital funding to operate your business. It's allowing you to pay things like payroll, fixed debts and costs, accounts payables. This is not a loan for expansion. This is not a loan for scaling. This is not a loan for advertising. This is not a loan for investing in other investment properties. There are other SBA loan programs for that. This is to allow you to operate your business that has been impacted by the revenue impact from coronavirus or COVID-19. It's got a very low interest rate, 3.75%, yikes, 3.75% for businesses and 2 3/4 for nonprofits. So again, nonprofits can apply for this. I highly recommend if you're operating a nonprofit that was doing well prior to coronavirus, and because no longer can you do fundraising activities, no longer can you do galas, this is a great place to get funding to keep you running until everything shuts down. It's for income loss because of COVID-19. This is not a loan that will be approved if you had substantial economic loss prior to coronavirus. It's approved in all 50 states. Finally, last week it was only approved in 43 states, which is kind of weird. But now it's approved in all 50 states, and it's for most business industries. I've heard folks even ask me, is this for real estate investors? Is it for property managers? Is this for realtors? Yes, it fits for pretty much most industries out there. The industries that it won't be approved for are things like casinos, anything that has to do with gambling, anything that has to do with the marijuana space because it's not federally legal, stuff like that. So I just wanted to share this with you because we have this limited time window. I would say probably about 3 or 4 months till the funds are spent up, and maybe even faster than that. Telling you, this is an amazing opportunity if you're running a business and you're looking for additional capital, keep you operational. I got friends who are hairdressers. They have great salons. I have a friend that has an amazing lash bar in Utah that just recently had to close down yesterday and send her employees home because she was shut down by the state. But she still got her fixed cost of all the loans she took out for her equipment. She's got her lease. She's got all the utilities and stuff like that to operate her business that still need to be paid even though revenue has come in. This is a perfect loan for stuff like that. If you're a restaurant owner, if you're a brick and mortar retail owner, if you're an e-commerce person, like these are things that are perfect. So if you are interested in getting a report, just shoot me a little DM or put in the comment section that you're in. And if any of y'all got any other questions, please let me know. And if you know any entrepreneur friends that are in desperate need, dire need of capital because of coronavirus, tag them on this. I'm going to keep this live as a live, like actual video indefinitely because I feel that this is an amazing resource and it's a tremendous amount of value that all entrepreneurs should see, whether they work with me or not, whether they work with my team or not, or you go and apply on your own. I don't care. I just want to make sure that entrepreneurs are taken care of and are informed about what they can do financially, because we got this crazy challenge happening. And the worst thing that could happen is that you have to close down your business because of coronavirus, when there's amazing resources like this out there. Anyway, I'll pop on again tomorrow to talk about some other financial resources for relief from coronavirus, like Facebook's grant program. A couple of the state programs are out there. So I'll see you again tomorrow at noon. Peace out. Love y'all.